Hey there, you're watching Success Wave. This video is about what is Litecoin, how it was made, and more about it. If you don't want to miss out on our videos, please subscribe our channel and hit the notification bell to get notified every time we post new videos. There are 180 internationally recognized currencies in circulation, ranging from the Samoan Tala to the Burmese Kyat. Just like with regular currency, there are multiple cryptocurrencies too. Because it was the first, Bitcoin gets all the publicity, but it competes against dozens of aspiring alternatives, one of which is Litecoin. Measured by market capitalization, or the amount of currency on the market, Litecoin is the third largest cryptocurrency after Bitcoin and XRP. Litecoin, like its contemporaries, functions in one sense as an online payment system. Like PayPal or a bank's online network, users can use it to transfer currency to one another. But instead of using US dollars, Litecoin conducts transactions in units of Litecoin. That is where Litecoin's similarity to most traditional currency and payment systems end, though it's very important. How Litecoin is made. Like all cryptocurrencies, Litecoin is not issued by a government, which historically has been the only entity that society trusts to issue money. Instead, being regulated by a Federal Reserve and coming off a press at the Bureau of Engraving and Printing, Litecoins are created by the elaborate procedure called mining, which consists of processing a list of Litecoin transactions. Unlike traditional currencies, the supply of Litecoins is fixed. There will ultimately be only 84 million Litecoins in circulation and not one more. Every 2.5 minutes, the Litecoin network generates what is called a block, a ledger entry of recent Litecoin transactions throughout the world. And here is where Litecoin's inherent value derives. The block verified by mining software and made visible to any miner who wants to see it. Once a miner verifies it, the next block enters the chain, which is a record of every Litecoin transaction ever made. Mining for Litecoin. The incentive for mining is that the first miner to successfully verify a block is rewarded with 50 Litecoins. The number of Litecoins awarded for such a task reduces with time. In October of 2015, it was halved, and the halving will continue at regular intervals until the 84th million Litecoin is mined. But could one unscrupulous miner change the block, enabling the same Litecoins to be spent twice? No. The scam would be detected immediately by some other miner, anonymous to the first. The only way to truly game the system would be to get a majority of miners to agree to process a false transaction, which is practically impossible. Mining cryptocurrency at a rate worthwhile to the miners requires ungodly processing power, courtesy of specialized hardware. To mine most cryptocurrencies, a central processing unit in your Dell Inspiron isn't anywhere near fast enough to complete the task, which brings us to another point of differentiation for Litecoins. They can be mined with ordinary off-the-shelf computers more so than other cryptocurrencies can. Although the greater a machine's capacity for mining, the better the chance it'll earn something of value for a miner. What is Litecoin worth? Any currency, even the US dollar or gold bullion, is only as valuable as society thinks it is. If the Federal Reserve started circulating too many banknotes, the value of the dollar would plummet in short order. The phenomenon transcends currency. Any good or service becomes less valuable the more rapidly and readily and cheaply available it is. The creators of Litecoin understood from the start that it would be difficult for a new currency to develop a reputation in the marketplace, but by restricting the number of Litecoins into circulation, the founders could at least allay people's fear of overproduction. There are advantages inherent to Litecoin over Bitcoin. Litecoin can handle more transactions given the shorter block generation time. Litecoin also has a barely perceptible transaction fee. It costs 1/1000 of a Litecoin to process a transaction, regardless of its size. Contrast that with PayPal's 3% fee. In the physical world, the most reliable stores of value become the currencies of choice in the event of crisis. In the late 1990s and early 2000s, Zimbabwe became synonymous with hyperinflation. When inflation reached 89.76 trillion% and rendered the Zimbabwean dollar worthless, that wiped out the fortunes of many people unfortunate enough to have held liquid assets. People had no choice but to use something more stable, primarily the US dollar and South African rand, for daily commerce. The bottom line: once a currency reaches a critical mass of users who are confident that the currency is indeed it represents and probably won't lose its value, it can sustain itself as a method of payment. Litecoin isn't anywhere near universally accepted, as even its own founders admit that it has fewer than 100,000 users. But as cryptocurrencies become more readily accepted and their values stabilize, one or two of them, possibly including Litecoin, will emerge as the standard currencies of the digital world or the digital realm. How does Litecoin work? Litecoin is an online network that people can use to send payments from one person to another. Litecoin is peer-to-peer and decentralized, meaning that it is not controlled by any entity or government. The payment system does not handle physical currencies like the dollar or the euro, and instead uses its own unit of account, which is also called Litecoin. This is why you will often see Litecoin categorized as a virtual currency or digital currency. Litecoins can be bought and sold for traditional money at a variety of exchanges available online. Blockchain technology. Litecoin is based on blockchain technology, the same as Bitcoin. According to Litecoin itself, the Litecoin blockchain is capable of handling higher transaction volume than its counterpart, Bitcoin. Litecoin has a higher frequency of block generation, which means that the network supports more transactions and benefits from quicker confirmation times. Should you mine Litecoins?
Professional traders suppose that trading Litecoin could be more profitable than data mining. For instance, by using Admiral Markets MetaTrader 4 and MetaTrader 5 trading platforms, along with the MetaTrader Supreme Edition plugin, your costs are much lower compared with setting up ASIC's hardware. That is considered to be expensive and far more surefire investment. There are a lot of risks involved, including but not limited to exponential network difficulty. Difficulty will increase as more and faster miners join the network, driving your profitability down. For this reason, it is important to make a realistic prediction of how much the difficulty will evolve in the near future. Potential low resale value. ASIC hardware can mine Litecoins extremely efficiently, but that's all it can do. It cannot be refitted for other purposes, so the resale value is very low. Potential low resale value. Delivery delays. You don't want your hardware delivered months after you buy it. In particular, there have been many bad reviews on the internet about pre-ordering mining hardware. Power consumption. You don't want to pay more in electricity than you can earn in Litecoins. Simply put, trading Litecoin versus US dollars could be far more interesting, profitable, and less expensive. Risks of trading Litecoin. Here are a few points that summarize some of the risks. As with Bitcoin, there is little historical valuation range or comparative cryptocurrencies. Basically, the question of how you assess what is fair value is difficult to answer. Changes to international capital controls could reduce cryptocurrency demand. Countries like China have laws that protect capital outflows, hence money is being flooded into unregulated cryptocurrencies to avert such capital controls. A change in laws regarding capital outflows could dampen demand. It is unregulated, thus some may consider it a high risk. However, this is subjective. At the end of the day, it's just a currency. It is a currency similar to a commodity in nature, hence it is subject to market fluctuations such as demand and supply. But this should be a positive risk for traders dealing with commodities. Is Litecoin legal? Yes. Regulations vary country by country, but you can expect to see national financial regulators interested in Litecoin and other virtual currencies, potentially along with regional regulators at a sub-country level. That's it for this video. Do you want to invest in Litecoin? Let us know in the comment box and see you in the next video. Till then, goodbye.